Welcome to the FY18 Janison Investor Presentation. My name is Tom Richardson. I'm the CEO of Janison and have been for 3 years. Over this time, the business has more than doubled, with income growing from $8 million in FY15 to around $17 million last year. We've now got 85 full-time employees, and we've shifted from being a private regional Coffs Harbour-based business to an ASX-listed Edtech company with offices now in Singapore, Sydney and London, with truly global ambitions. This is our first year as a listed company, so a brief introduction. I was previously a partner at Deloitte and a consultant at Bain, which essentially services businesses that sell time. And I'm excited to be leading the growth of a platform business. 61% of our income last year was from licensing and hosting our IP. I first learned about Janison as a customer of the learning division, which now is a 20-year-old mature, profitable business which had steady platform growth last year of 17%. And I'm also incredibly excited about the assessment division of Janison, which was incubated back in 2013, and we saw the platform grow 92% in FY18. Last year we generated an EBITDA of 3.2 million in our first year as a listed company, and with the digital disruption of education accelerating, we are presented with this massive market opportunity for online learning and online assessment. We have a plan to capture a healthy share of this market with a specific focus on the Asia region. This year, in FY19, we're investing in our product and in business development and sales to scale the business and seize this opportunity. For the next 30 minutes, I'll give you an overview of what we do and our business model, a focus on the FY18 results, which we'll go into by group and by division, an insight into our strategy and share our priorities, an outlook of where we're heading in FY19. Education is often the biggest investment we make as parents. It averages around about $44,000 per child per annum. And in some countries in Asia and for some households, it can account for up to 20 to 30% of their household expenditure. And this huge expense in education is being disrupted rapidly. I think you'd all agree there's not too many kids using pen and papers anymore. So the market is exploding, and it's forecast to be a $252 billion market by 2020 with 17% annual growth rates. And in many countries, it's 2 to 3 times faster than that. In certain niches, it's even faster than that again. So we're driven by the opportunity, but also driven by the social benefits that fair and equitable and better education provides to all. Janison has 2 core divisions that have different maturity and a different profitability. The assessment division was incubated, as I said, 5 years ago, had 92% growth last year, is essentially a break-even business, and continues to be a key focus for our product investment. We started in the school sector back in Singapore, working for Singapore Examinations Board, and in Australia with NAPLAN. Now we moved into languages last year, working with British Council on APTIS and the IELTS practice test. Higher education is an area that we opened up again last year, working with Institute of Technical Education in Singapore. And then moving into the certifications area where we have ambitious plans and how to grow that area. And that's another exciting division of the Janison assessment business. Learning, been around for 20 years, 17% growth last year in the platform and content, generates all the profit in the business to date. Relatively mature market, which is focused on workplace learning. And there's 2 main growth sectors there. There's the performance side, which is about improving business performance, management, leadership, sales, soft skills. And then there's risk, which is compliance and risk management. So those are the 2 main divisions in the business. The business model is relatively simple. Our aim is to generate high margin, recurring platform and content income. Platform increases year on year as usage increases, either by expanding the curriculum or the subjects being used or increasing the student numbers and volume. This has increased from 53% of our total income to 61% last year. For the services element, that's essentially the money we get paid for completing projects for clients to build out functionality in the building IP, so we can then sell the licensing and hosting fees. We essentially aim to recover the direct labour costs by charging for the services that we build, but we also do make some strategic investments, and we'll invest our own money in services to build out the platform and the functionality. Just in summary then, as part of the overview, it is the 20th anniversary of the business this year. It was listed on the ASX back in December 2017. It's grown to 17 million in revenue. There's two main divisions, online assessment and online learning, forming part of the education technology market, which is estimated to grow considerably, and there are pockets of that market that are growing faster than those rates. We achieved a 40% growth in our core recurring high margin platform and content income, and remain a very profitable business. So how did we go last year? We achieved revenue of 17.3 million, and the share market on the left here, the price hovered anywhere between 40 and 45 cents with a 52-week high of 55. You can see our EBITDA multiple of 15.7 and revenue multiple of 2.9. We'll expand on the earnings of each of the segments as we go through the presentation, but you can see the high level there with the total group revenue increasing 21%. The high level numbers and the highlights of the year, as we say, the platform and content growth of 40%, exceeding now $10 million. And if we continue to grow at that rate in FY19, it'll get closer to 15 million of platform and content income. You'll see the international income share there up 23% as we expand and grow into Asia. The average revenue per client, which is driven primarily by our customer success function, increased 16% to over 200,000 per client. Trading EBITDA of 3.2 and cash of 3.6. The assessment division had a 92% growth in the platform income to 4.5 million. That's essentially our key projects moving into the operational licensing phase. For example, NAPLAN licensing began last financial year. You'll see a slight decline in services. The plan is to continue with a relatively flat services model into FY19 and really drive the growth of this recurring platform revenue. And that essentially talks to the effectiveness and scalability of the company's business model. For the learning division, platform and content revenue increased by 17%, largely driven by upsells to existing clients and expansion of those relationships. Total revenue grew 16% in FY18, and we've now appointed a new head of learning, and we expect to see continued growth in FY19. As a group, total platform income grew 40%, healthy growth in the platform. You'll notice cost of sales there did increase by 33% from 8 million to 10.6 million. There are two large investment projects that we worked on in FY18 which required us to invest labour. One was the major project in schools, which is the NAPLAN project, where we essentially almost gold-plated the offering with extra security and scalability to make sure that that was a success, and it was a resounding success. And in the higher education area, we also invested in a project in Singapore to build out functionality in that space so the platform was well suited to other university clients, and that'll be a focus in 19. Gross profit percentage therefore decreased from 44 to 39 to reflect this investment. We plan to wind down those investment projects by the second quarter of 19. And our OPEX increased slightly to cover our increased SG&A as we start to invest in business development. Janison currently has 3.6 million in cash. The cash from operations is 840,000. There are some customer receipts which were unbilled accrued revenue from large projects which are due to be paid in FY19 as the milestones are due in this financial year. The investing activities of $4 million essentially included the listing costs and the cash consideration paid to the original founder, and the software capital also included in that. And the financing activities are really the net proceeds after paying off shareholder loans and the dividends required from the initial listing. Current ratio of 2, current assets increased to 9.3 with our cash and accounts receivable increasing. You will notice the net non-current assets has increased from 2.1 to 8.2, and there's part of that, a key part of that is a deferred tax benefit, which is linked to the RTO of 5.1 million. We paid off our non-current liabilities by paying off the shareholder loans, leaving us with net assets of 12.7. As far as our strategy goes and where we are investing and what we're doing with our product and business development to ensure long-term sustainable growth and where is that growth coming from, it would be a good idea to share a little bit more on our strategy. Look, Asia is clearly our neighbour and our clear focus. There are 600 million school students in Asia, which includes China and India. That's 10 times the US. What makes it so attractive, not just the size, but Asian parents generally invest heavily in education. In average, parents spend, as I said, $44,000 per annum. In Hong Kong, it's 3 times that, over 130,000. Singapore, 70,000. Taiwan, China, Malaysia, all well above the UK. You know, up to 30% of household expenditure on education in China, versus in the US it's like 1.6%. This volume times price, when you think about it that way, makes for a massive market for education spend. And technology is rapidly disrupting that as internet speeds increase and there's more and more cultural acceptance of online learning in the region. Now, Asia is projected to be over half, 54% of the global Edtech market by 2020, which is staggering. And there's less established competitors in this market, and we're well suited to penetrate this market. Why are we well suited? Well, geographically, we have teams in Australia and New Zealand. We've opened our office in Singapore. We've got a great reputation in Singapore. We established Janison Asia now as a business entity about 5 years ago. And we only serve 5% of the region. In the past 12 months, we've established a development team of about 60 individuals in Vietnam. We've outsourced operations to Philippines. And we have a very strategic plan focused on those markets that we currently have a presence, but also the primary markets, including Thailand, Malaysia, Hong Kong, and India. And then the secondary plan on the other markets, including China, Japan, South Korea, and Indonesia. Give you an idea of the scale of these markets and the size. If you take the 2 key segments that we're focused on, the schools and the higher education market, you know, the schools market is over 500 million students in K-12. And our focus, if you just take the assessment side of that market, each of those students would do up to 4 tests, maybe more per annum. These are primarily low and mid-stakes tests. And if you assume an average of 10 cents per test, then the market size there is 200 million plus. On the higher education market, again, if you look at the 87 million students there, and assuming again 4 tests per student, which again will probably be more, but they are higher stakes type tests, where you can charge anywhere from $1 to $10 per test, which is 50 times the price you typically would pay for a low stakes school assessment. If we assume $5 per test as an average, then the market size here is a whopping 1.7 billion. So you can see, even though there's less students in higher ed, it's 6 times the market size, and is a key part of our strategy on how we can take the work that we've done in the higher education market in FY18 and continue to replicate that further into FY19 into other university environments. So we have 4 key priorities that we're focused on to get our share of this massive market. One is about nurturing what we already have through our customer success function and working with our current clients. Secondly, it's about our investment and our product investment in world-class products. Number three is very much how we target these very specific niches and high growth segments, which we'll tell you more about. And there's planned to generate $150 million in revenue from those segments. And then intensify how we do our sales and marketing. From a nurture existing clients perspective, we have built some incredible relationships over the past 20 years, and these relationships are absolutely key for us growing in the region. Whether it be ITE based out of Singapore, work we did last year, whether it be a long-standing relationship with New South Wales Education, UNSW Global, who again is an Australian-based organisation but has a very international focus, or you'll see British Council there. Again, it's located in the UK, but very much focused on English language testing, which their key market is in Asia. So these relationships on that side help us and will help us grow into the markets that we were aiming to penetrate. And they already have big plans and great brands in those markets. On the learning side, it's essentially the largest corporates in Australia and large government agencies, where we've increased our average revenue per client across these clients by over 16%. To over $200,000 per client, and we continue to focus on nurturing and growing those existing clients. To continue to win in this market, in this evolving market, we focus on developing critical functionality and building out our platform. We've typically invested around 15 to 17% of our revenue, and last year we capitalised 59% of that. And that investment has really been building out core functionality. Last year, we focused on authoring, the test delivery part, the marking, and the analysis and the reporting, all underlying functions of our assessment engine. Continue to build out that functionality. Really focused last year on schools, language, and the higher ed market. We've also focused our investment on specialist functionality, for example, the replay and the remote, which enables us to provide online assessment in areas that have low or no bandwidth, which is pretty important in rural and regional parts, either of Australia or in the region. And we won awards, that was the I Awards, specifically for that innovative development and that new technology. In FY19, our focus shifts a little more to finishing off the higher ed product and also working in the certifications area and assessment. The challenge for us is to manage our cash flow so that we can make sure we're very prudent in how we invest in our product, but we don't miss the opportunity. With so many great product ideas, that's an ongoing challenge. Now look, we've made no secret that we have ambitions to be a $150 million revenue business. We address the full education life cycle, all the way from when you start school in kindergarten, go through K to 12, and then you may want to go and study at another university. So then, particularly in Asia, you'd learn English as a language, and then you'd enter into your higher education. And then once you're qualified, you may end up doing professional qualifications and certifications. Then you enter the workforce and the need to continually build your skills. And then obviously complying with laws and regulations. So there is very much a left to right as far as the typical education life cycle. So how would we build a $150 million business across this life cycle by 2025? As you can see here, assessment accounts for about 70%. We see that being generating $110 million worth of revenue for Janison from the assessment solutions that we provide. Learning, we see is 30% or $40 million by 2025. I'll give you a bit more of a flavour on these and where we see the opportunities and how we've sized these markets. In the school space, we've talked about the 500 million students already in the region. 10% of that market is 50 million students. We know students do roughly 4 tests per annum, and could be more. So that drives us to a $200 million test being done across those student base. At 10 cents a test, that's $20 million of revenue. So that's assuming a 10% share of the market. We can see $20 million of revenue. In FY18, we did about $6.5 million in this sector. That plan, and with the work we're doing in Singapore schools. And we're a long way down the path of generating the revenue that we target out of schools. With language, we see that as a $30 million annual revenue opportunity by 2025 for Janison. Based on the number of language entrance exams that are done, whether it be IELTS, TOEFL, PTE, there's over 40 million of those done every year. We're aiming at a 10% share, which is 4 million exams at a $7.50 on average per test. Now, we've already started to penetrate that market with practice tests for IELTS, which in itself has 3 million tests per annum, and APTIS, which will have more than 1 million tests per annum. We're already well and truly making some headway into that market, but we see a big opportunity that we can continue to focus, knowing that there are 300 million Chinese learning English, and that's just a huge market and a huge market opportunity. Higher education, again, we see this as the real focus for FY19 and priority number one. Because 23,000 students roughly in each university, again, doing a number of tests per student. It can be up to 100,000 plus tests being done by each university every year. So if you take 100 universities that we're focused on, that's over 10 million tests. And these are higher stakes tests, so they can be up to $20 a test. That makes it a $200 million market. And we're seeing 25% of that market is a $50 million opportunity. In FY18, we took some headway there and made $2.4 million in revenue, and can very much see the runway for us to be able to generate $50 million in revenue in that sector. Certifications, just think of any other exams that you do as an adult. Currently with paper and they're moving online. Think about your driver's license, your citizenship, professional qualifications if you're an accountant or lawyer, if you're a clinician in the industry or in Defence Force. There's so many paper-based assessments and exams that are moving online. We hadn't done any work in this in 18, but we expect that to grow rapidly in 19 and look forward to sharing some exciting news about that. But we see that at least being a $10 million market for Janison by 2025. Moving to learning in the workplace. Again, it's a more mature market, so it's important to be very focused on the high growth niches. We see the performance niche, which is essentially 21st century skills, enabling people to succeed and perform in the workplace. Organisations we work with are willing to pay about $30 per learner to be able to build those skills using digital technology, including Westpac, Suncorp, those type, Rio Tinto, big brand name clients. Today that's about a $3 million market for us, and we can see the runway to be able to generate the revenue that we need to there simply by winning those large corporate clients and large government clients. From a risk side, primarily the work we've been doing here is in financial services, helping large clients deal with the challenges of ongoing risk management and compliance. And last year generated about $5 million of income there. So again, well on the way to being able to achieve our ambitions in the risk side. We also agreed to invest in business development. Again, we've been very prudent in this area. We have recruited 2 key sales staff and done some focused marketing. We plan to invest more in this space. The challenge again here is managing cash flow and our EBITDA goals. And that's really our main constraint on how hard we go here. But there is a need as we shift from really doing large projects to focusing a lot more on out-of-the-box products, that we need to spend more on marketing and sales. And that again is a focus for FY19, and we expect to see that increase. So what is our outlook for 19? I think as you can see, the market opportunity is massive. And the key for us is to manage our cash flow and to prudently invest to capitalise on that opportunity and make sure we're very focused about how we invest in our product and in our business development to seize the opportunity while still retaining the right levels of cash. In summary, we can see there is a wave coming. Here are the number of tests that are delivered by sector and the number of tests delivered by states. And you can see that 19 and 20, we do start to see massive growth in the number of tests being delivered. And particularly you start to see medium tests and even high stakes tests, which can earn up to $5 to $10 per test, will increase as there is increasing confidence with online assessment and the reliability of online assessment and the benefits that they can deliver. In summary, our expectation is to continue to grow the platform and the content at least 30% year on year. Our focus is clearly on Asia and international growth. We'll continue to nurture our key clients and build our business with them and look at increasing that average revenue per client. Invest in our platform and our business development, and prudently ensure that we manage our cash and our EBITDA expectations. Thank you very much. If there's any more details you require, please don't hesitate to reach out. Appreciate your time.